All right. Hello, everyone. Welcome to our podcast. This, I believe, is our 12th or 13th.
Our 12th podcast, indeed.
12th podcast, and a very special podcast, I might add.
You are
because
right.
for the very first time, we actually have a guest.
We do.
We have a guest. So I'm going to introduce myself, Chris Capches, CEO of Chestnut Park Real Estate. I'll let
I'm
Doug introduce himself.
I'm Doug Gubitz, president of Chestnut Park Real Estate, and
I'm Miles Nadal. I'm the founder and the chairman of Peerage Capital and Peerage Realty Partners, and I've had a privileged partnership with Chestnut Park for over 19 years, and today is the first time I've ever been in your office.
Quite true.
that's,
Quite true.
well, it's a privilege and an honor to have you
It is
here.
a privilege. It
So
is a
thank
privilege.
you for doing this.
But you know why I never came before?
I don't.
Because I had so much confidence in the management that I thought, why would I ever come to visit? I won't ruin a winning track record. And every time people said, well, you can come now, I thought, no, why would I ruin a winning ball game?
I hope he feels that way after the podcast.
He's blushing. He's blushing.
And as,
That's a good story, Miles.
as usual, of course, we're going to be decanting some wine, but I think we have to explain what's happening with the decanting of the wine
We
today.
do.
Because of the somewhat
Hiccup.
negative experience that we
had a
had.
negative
So I'll let
experience.
Doug explain that first.
Plus, we have a twist
Yes.
today, in that Miles prefers not to drink white wine, but professes to be an expert, shall we say,
Yes.
on matters Coke-ish.
Careful how you say that.
Yes.
Coca-Cola-ish.
Yes,
That's better.
that's better.
Coca-Cola-ish. And particularly Diet Coke, I understand, as my wife is also an aficionado.
Yes.
And Coke Zero sugar something, I'm not sure.
Yes, my go-to is Diet Coke caffeine free, but very few places have that. And in Europe, unfortunately, they don't serve Diet Coke, or in Asia, they serve Coke Zero. And people say, oh, no, it's Diet Coke, it's the same. And I'm like, no, it's not.
Well, we're going to test your skills.
I hope it's good.
So we have Coke, Diet Coke, and Coke Zero here. The glasses are numbered. You do not know which
Okay.
is which.
I hope my proficiency is as good as I think
We're going
it
to
is.
find out,
Yes.
Miles.
Likewise, last time, Chris and I walked down to the LCBO at Summerhill and bought two Chardonnays.
Right.
A Chablis, obviously from France, a Premier Cru, which is La Chablisienne, and it is 2022. And we also bought a Canadian Chardonnay by Taz from the Niagara Escarpment, 2023. We tried them. They came out, we were quite impressed, I would say, initially. And in short order, they became uninteresting and almost, completely unenjoyable,
I would
shall
agree.
we say? Yeah.
Yeah.
And it didn't make any sense. But the truth is, we bought these wines and tried to get them cold very, very quickly because we only walked down hours before the podcast. It was my theory that they were not chilled through and through, so they kind of crumbled as the event carried on. So this time, we bought the exact same two wines to put some meat on this theory. And now these have been fully chilled for a week and have been in a fridge for the last day. And number one is the Chablis from France, and number two is the Taz wine.
Shall we?
Yeah, we might as well give it a whirl. And at the same time, Miles, please take your first shot at distinguishing which is which. We have pictures of these, right, for the audience to see. Okay.
Nice nose on both.
Both agreed, totally.
Oh, I'm very comfortable. I know what it's what.
That didn't take you very long.
No, this is the Diet Coke, and this is the Coke Zero. Number two is the Coke Zero, and number one is the Diet Coke, the white can.
We might as well reveal that now. Are you ready for the
Absolutely.
reveal?
Absolutely.
Number 2 is the Zero. And number 1 is the Diet Coke.
C'est bon.
Congratulations.
Nicely
You
done.
have an
Miles.
excellent Coca-Cola palate.
Nicely done. Nicely done.
If I would have failed that one
Yeah.
after the amount I've consumed, I would have been highly disappointed.
They're brilliant today.
They are a lot better.
Yes.
I
So the
think.
temperature made a huge difference.
Temperature has made a huge difference.
White wine tends to be served too cold, in fairness, but in our last podcast, they were cold right now, but the big question is, how are they going to perform in the next 20 minutes?
We'll
What
find
is-
out. We'll find
what's
out.
the ideal temperature?
57, 58 degrees for white. Mm-hmm. People tend to serve white too cold and red wine too warm.
Yes.
It's a phenomenon, particularly at a restaurant.
But the brilliant thing is this Taz, which is a very local one,
Yeah.
holds up very nicely against the Chablis from France.
And it's a premier cru.
And
so
it's a premier
it's
cru.
not, but these are both available for anybody.
And they're in the $40
$38,
range.
$40, something. I can't remember which was what, but they were both below $40.
I can add some color to.
You have added some color.
You have.
So I'm an expert at Diet Coke. I've consumed it around the
You've
world.
already proven it.
But I will tell you something. People might ask, where is the very best Diet Coke in the world? And I would say to you, McDonald's. So I was with a franchisee who had 6 franchises at McDonald's on a trip recently. I said, why is Diet Coke at McDonald's so much better than anywhere else? They chill the container of the syrup. They chill the water. They have very clean water. The ice is properly cleaned, and the filtration system is dealt with daily, and that's why the quality of the Diet Coke coming out of the fountain at McDonald's is the very best in the world. Otherwise, I like Diet Coke in a bottle, a small bottle, not a big bottle, and I like it in a red wine glass with ice. For those people that are interested, I just would like to
I
get that color.
suspect there are a lot of people who are interested in these comments, actually. Diet Coke is a phenomenon.
It's the most popular drink now of the
I've
Coca-Cola
not
company.
had a Diet Coke in my entire life.
You
Well,
don't know what you're missing.
Yeah, those who love it a lot and are very, very dedicated to
Yes.
it. In fact, I think there were some comments in the press 6 months ago that Diet Coke was being eliminated. I don't think that actually ended up happening.
No.
But it probably set the world into a spiral.
The theme of this podcast is decanting real estate.
Yeah. Your point being?
What? Do I need to state it?
I'll pick it up in a
this
minute.
was
we have the opportunity
Yeah.
to ask some questions of Miles, to elicit some information that I think our listeners would be very
Well,
pleased.
so far,
But
I
I
think
thought
we've been
that
regaled in
No, as it
fantastic
relates to
information.
real
Real
estate.
estate.
But I thought my perspective on an alternative beverage that was not a libation of a spirited nature might be
A
additional value.
libation of a spirited nature. That's
That's
a
very
keeper.
eloquently
That's a
said.
keeper. Good one.
Yes.
Very nice.
But I think you should ask him some questions.
Yeah. Okay. So let's move on to the real estate component of a decanting real estate, and we've discussed a few topics that we'd like to kick around today. The first one, for sure, I think, and the one that's most poignant and important to our community is artificial intelligence. It's on the top of mind of everybody, and certainly here at Chestnut Park it is. And Chris, for example, was recently at an Inman conference in New York, and the vast majority of those 4 or 5 days were devoted to how AI can enhance the real estate experience, how it can improve the delivery of our services, and efficiency. So we thought there would be no one better to talk about this than you, given your broad international real estate position.
Well, you're very kind. Firstly, I'm not an expert at artificial intelligence, but unlike everyone here, I don't have a job. So my quest is to meet interesting people who do interesting things in interesting places.
Are you guys working?
And I do have the opportunity to meet very interesting people. I think with Anthropic and other softwares, I think it's going to give us tools to improve our marketing. It will give us tools to have better information to inform our agents. and better tools by which to communicate with our customers,
Agreed.
our clients.
Very well said.
Agreed.
And that's going to be very helpful for us to provide a more value-added service. Because especially in the luxury real estate business, it is a huge investment for our clients, and they want to have the most informed decision. And I think these tools of artificial intelligence will only assist that, and the speed by which we get information, the accuracy and the comparative nature is only going to be exceedingly
Very well
valuable.
said.
And we haven't seen it evolve yet. It's just in its infancy stages.
Well, as you've said, Doug, a year and a half ago, we weren't even using the term AI.
We just started talking about it a
Yes.
year and a half ago,
Right.
you and I.
But I think everything that Miles said is exactly the positive side of AI developments and how we can use it in our industry to better service our buyers and sellers and the consumer generally. That's the
I'd
positive
add something
side.
else from a personal experience. I use ChatGPT extensively, and I use it for my communication with people. And people get my letters, which takes about 13 milliseconds to give ChatGPT, that I say I want to send a personal note of appreciation, gratitude for the meeting we just had, et cetera, et cetera. And people go, wow, that's a beautiful letter. So I also think it's going to be valuable for the agents to be able to take information and communication and customize it for their client on a specific property or any other subject. And it'll allow them to, if there's a question in the middle of a showing or listing or whatever, I think it's going to make them more informed to
Agreed.
be able to assist and give much more informed perspective on any subject.
Just as a commentary on that, what we're concerned about, and certainly here at Chestnut Park, we're trying to emphasize that we don't want to remove the personal high-touch connection from the client. Yes, we should use that technology, but we still have to be engaged and involved with the client on the personal relationship side, so as to not lose that, because we don't want to become a bunch of automatons in the industry, because that's when we run the risk of not being relevant.
That's an enormously important point. But I just thought of something as you were talking about the impact of AI on our day-to-day work. In fact, it can be even a bigger advantage, because what do we want in our industry? We want that high-touch, one-on-one, face-to-face, client-forward interactions. But a huge amount of time that real estate agents have to dedicate their time to is paperwork, comparable market analyses, tons and tons of background information, all of which can be done now remarkably quickly, opening up and freeing up the one-on-one, face-to-face, high-touch time, which really is the essence of our service. And we will have more time to do it now as a result of this.
I couldn't agree more. People do business with those people they like, admire, respect, and trust.
Correct.
And in the purchase of real estate, which is personal to everyone and is probably the single most emotional investment they will make, that will never be
And
replaced.
also the largest financial investment.
Absolutely. That will never be replaced by technology. The interaction, and we have so many examples of great success stories here at Chestnut Park, is all about the building of those trusting, intimate, relationships that go on generationally. And I think actually it's a critical distinguishing characteristic and a durable competitive advantage of Chestnut Park that we have agents who really believe that relationship, and that where they're almost friends of the family, not just the advisor, will only be more important going forward, because I think there's going to be a bifurcation. I think there's going to be a commodity side of the business, and I think there's going to be the high touch luxury side, that where people will expect more and more and more high touch
So you think
service.
it's going to be your point is very well taken. You think it's going to be stratified by price point, by price category?
Well,
The high touch luxury piece as compared to the the digitization of the service industry, part of it.
Henry Silverman once said, nobody clicks a mouse to buy a high-end luxury house. And the reality is that in Toronto, what's the average, our markets are about $1.6 million.
Right.
Okay. And that's a very sizable investment for people.
No question.
People want advice, and they're not going to rely on technology to get that advice and to make comparisons.
Well, on
that point,
on that point, I'm glad you said that.
Perfect
because-
segue.
Yeah,
Perfect segue.
And that point leads me to what I'm going to.
But it's stratified correctly.
Absolutely.
Price point
and it
wise.
also,
Yes.
the comments that Miles was making earlier also speak to this, because unless you are informed as an agent, as an advisor,
Yes.
understand the market, understand all the nuances of the market, you might get stumped by this situation that I'm going to use in.
That's an enormously important point. Can you repeat that one more time? That, if you remember what you said, that's very
I don't
important.
know. I'm sure AI could tell me.
You have to be incredibly well advised now.
Correct.
Otherwise, AI is going to take over that function
Correct.
from
And
you.
this is a true life
So we have to step
situation
up our game.
involving one of our situations. They were representing a buyer. They visited the property on at least 6 occasions. They put an offer in. The offer was conditional on some due diligence. And in the course of doing the due diligence, the buyer decided to ask ChatGPT if they should buy this particular house.
By the way, they already bought it. They bought it
They
conditionally.
bought it conditional. And this is the advice that ChatGPT gave. At 1.35 purchase, this property, and I won't identify it for the purposes of this, is not attractive. For it to make financial sense relative to the comps, you need to be in an all-in around position of 1.4 to 1.45 max. That means your purchase price should be closer to 1.25 to 1.28. Then, of course, you get AI language. That's the zone where the headache disconnect is real. What does that mean?
Okay, that means this property needed a couple $100,000 worth of renovation. And if you're
Correct.
going to put that sweat equity and money in, you've got to be able to buy this property at this price.
So how does it conclude? It says the market is softening in the short term, which is not correct. If you walk, you will keep your powder dry for better opportunities in the future. The buyer walked on the strength of this.
So do you want to know my point of view? So I have something called the Miles Nadal Theory of Irrelevance. And the Miles Nadal Theory, I'm going to give you 2
I'm
Miles
looking
Nadal
forward to
Theories
this.
of Irrelevance.
Should we taste the wine? Just
Yeah. We got to get ready for this.
The Miles Nadal Theory of Irrelevance is, and I just turned 68 years of age on Monday. I'm celebrating my 46th
Bravo.
anniversary of being in business.
46 years?
Yeah.
Wow, impressive.
And I have failed forward for 46 years. And
You have what?
Failed forward.
Failed forward, haven't you?
Okay.
Yeah, sure.
So we all have consternation of investment decisions we make. Nobody wants to make a bad decision in the short term. They want to make sure they're making a good deal. Okay. But the problem with that analysis by ChatGPT is you're assuming that the market is highly efficient and there's no other buyers. As you know better than I do, because you sell 1,000 houses a year or more. Maybe more.
Lots more.
Okay, I apologize. I'm 20 years out of date. I apologize. So, in that case, you're assuming the market's pretty efficient because if you have multiple buyers, an auction necessitates that you pay fair market value plus an emotional premium. Don't forget, I spent $75 million buying cars, so I know what happens in those dynamics. So, if
You mean how
there's-
you get swept up in it?
you get swept up, and somebody else, if Mr. Captious wants to own it, and he said, "Look, I'm going to pay 1.3," and someone says, "Well, if he's paying 1.3, I'll pay 1.35," and then they say, "What's your best and final?" Before you know it, you're at 1.45 or whatever the number is. The theory of irrelevance is over the long term. it's not the extra $100,000 or $150,000 that makes a difference on your success or lack thereof. It is some other major decision that you made. Warren Buffett said that wealth is not created in the buying, it's not created in the selling, it's created in the waiting. So I can tell you firsthand, I bought lots of properties where I paid the top of the market. And it didn't go anywhere for a few years. And then 25 years later, you look like a genius. So I think the most important thing is, do you love where you're going to be? Are you prepared to be patient? Have you looked around sufficiently? And are you comfortable that you could afford to pay the premium relative to that market? And if you can, then just put your head down and enjoy every single day.
But that speaks to the point I was trying to make, in that if you have someone who knows the market, who speaks as you just spoke, you will be able to allow the consumer to make a more informed decision, taking all these factors into account that ChatGPT did not take into account. It just looked at the numbers.
So I would say that we should be telling our agents, ask ChatGPT for the comparison as well. So if they come back with that, you're armed to be able to say, this is what ChatGPT
I actually think
says.
they are doing it.
Because I think you need an informed argument about why it's justified, but also you can't, like I always say, I want to be 6'4".
Yeah.
Like I haven't given up on being 6'4".
Oh.
But no, I haven't.
Well, that's amazing.
Yeah, and I won't. But the point
That's
is,
determination, Miles, if I've ever heard it.
Yes.
but the point though there is, it wasn't purchasable at 1.25 or whatever ChatGPT said, right?
That's an excellent point.
It wasn't. So they lost it.
So then you have to determine, how important is it to you? Is the premium worth it? Is the juice worth the squeeze to get what you
But you
want?
see, if someone is speaking to the consumer the way you are, consumer can make a much more informed decision. Because there are many intangibles that are not covered by ChatGPT. And that's what you're speaking to.
With one proviso, maybe yet it's not addressing those intangibles. That's a wait and see game in terms of the speed in which AI is advancing.
Then it won't kill the deal.
In all likelihood, it'll start to get better at advising if we have this agentic agenda in AI. Maybe it'll get so good,
Right.
so proficient at these kind of analyses that it actually supports our positions.
Maybe it'll get so good that it'll actually buy the house.
So if you think about the
Then we have to do an assignment deal to get it back from AI so that we get to buy it.
So if you think about, let's assume over the last 30 odd years, you guys have sold 50,000 houses, okay? And if that's the case, how many times did someone buy a home and their expectation is they needed to invest $150,000 to refurbish the house to their standard,
Many times.
okay?
Many,
And how
many times.
often were they off by 50 to 100% more?
Every single time.
I was just
100%.
about to say.
Yes. And,
Plus what?
and-
Plus
and-
one. Plus, they thought it would be done in 6 months. It was 2 years.
And so what did they say? Oh, Mr. Gubitz, you have to replace the doors, and if you do, you have to redo the moldings. So,
And the
okay,
threshold,
fine, go
and
ahead.
the floor in front of it, and blah, blah, blah.
So what ends up happening? You just absorb the incremental $150,000 because you say, well, I'm investing in my family and the beauty of my home.
For sure.
And you just ignore it.
Exactly.
But if you had said to someone that 150 is wrong, you're going to have to spend 300. People at the beginning might say, well, I don't know if I really want to do that. So to me, it's all part of this theory of irrelevance. As long as you're getting what you want and you're prepared to be patient, and you have the ability to make it affordable.
I also like your comment about Warren Buffett. It's not how you buy or how you sell; it's how you wait. Is that what
Yes.
it is? Yeah. It's it's the old story. Don't wait to buy. Buy and wait. And you're right. Over 20 years plus, you're going to look like a hero inevitably in a marketplace like Toronto.
I have been waiting.
Patiently.
Yes.
Let's do this.
See if it's holding out.
Well, it's a very different holdout than it was last time, in my most humble opinion.
I'm just getting so much fruit.
This is a far better experience than last time. It could be bottle variation, but highly unlikely.
By the way, my Diet Coke is getting better with the ice and the
Yeah,
chilling.
it's kind of settling in. You remember last
Christian,
time?
what do you think of those?
It's funny. The last time the Taz smelt,
These are
the
very
nose
good.
was so much more powerful, but they're both delicious.
This is a way better presentation this time, even though they're warming up considerably, and they're almost now at a point where they really want to be a little colder. The last time this happened, they just flattened out and became a little bit insipid. This time they're still really
I'm
good.
finding the Chablis cloying again.
Yeah, I'm not. So
You're not.
I'm going to have to
Then I'll leave it.
respect your view.
Let's.
But you don't think that about the Taz?
No. Let's take advantage of Miles.
Can I go back on one?
his international.
Oh, I see what you mean. Sorry.
Before you do, I
see
do
what
want
you
to
mean.
go
It
backwards.
is a little bit.
Can I go backwards? I coined a phrase that luxury is an investment you make with your heart. I believe your home is an investment you make with your heart.
Agreed.
And to me,
Your
if
marketing
it
director.
makes you feel good and you will enjoy that experience, the incremental amount is irrelevant over the long term. And so I really believe that. But I do believe use AI for comparison so that you have an informed point of view. Don't you agree? So that you can have the dialogue.
I think every one of our agents, and probably every agent in every marketplace, has this exact kind of dialogue with their clients, and it's a very hard thing to get through to people when they're dealing with their actual dollars and cents. I've had the experience many hundreds of times myself. You are right, and I concur entirely with your perspective. It's getting somebody to understand that and to relax into that paradigm. That's the skill. That's the gift.
Go back to market softening in theory. I'm going to wait. Well, the reality is it's like stocks. Nobody picks bottoms. It's not possible.
Nobody finds a bottom.
Yeah.
Nobody finds a bottom, and nobody finds that home.
Until it's behind you.
Yes. And they go,
Exactly.
oh, we missed it.
Missed it.
But if there's a place where you and your partner say, I love this place, this is it, it's very difficult to say, well, but I'd like to buy it cheaper. And I want to be 6'4", but that's not the conditions we're in today.
Right.
And so the question becomes, do you like it enough to pay what the market is going to require for you to be the owner?
Correct. And that attitude, if it needs some evolving right now because buyers are not making that decisions. That's one of the reasons why the market is slower than we'd like
Yeah.
it to be and has been in 3 years. But I think it's starting to shift and people are starting to look at it once again from that perspective. Interest rates have kind of leveled off. Values have kind of plateaued. And I think people are getting ready to make that decision.
It's also an experiential issue. It depends where you are in your buying process. A first-time buyer, that's a much more difficult
Absolutely.
analysis.
Yeah.
But when you're moving from your first house to your second, that starts to seep in. This is much more about the financial piece
Correct.
as about the family piece. And by the time you go from your second to your third, that is completely baked in, and then you have a much smoother transition into something you're looking to buy.
Look, the affordability issue for a first-time home buyer is a
It's
challenge.
paramount. It's
okay?
huge.
And an extra $100,000 on an $800,000 to $1 million or $1 million to is hugely material.
Absolutely.
And the affordability and the availability of financing is very challenging. So you can relate and be empathetic to that decision. Whereas if you're buying a $2 to $3 million home or a $3 to $5 million home, you have more flexibility in how you address that,
And that's
usually
why,
have more
Miles,
resources.
we've seen our luxury markets doing very well, notwithstanding that the overall markets, particularly in some jurisdictions, have done quite poorly over the last 2 or 3 years.
Because the buyers at that point already have a lot of experience in doing this,
Yeah.
and they're over the
And
anxiety
they're not
of
caught by the affordability
Right.
delta, as you would call it.
Yeah, you don't like that word. do
I
you?
hate that word.
I think it's a perfect
Delta?
Yeah, it's a great word.
I understand it. I relate to it. What would you like to have as a different word?
I
Yeah,
think the
difference.
Okay.
Delta is so much more elegant
Yeah, it
of
is.
a word.
It's also it's very precise.
Yeah,
Thank you,
It's
Miles.
a Greek word, you know.
So
Alpha, beta,
Okay, let's
gamma,
move. Let's
delta,
move. Let's
epsilon.
move because we have Miles. This is a very unique occasion having Miles here to some of the areas of expertise that we'd like to convey to to our audience.
Okay.
Doug?
We're going to move on to your understanding and analysis of the U.S. market compared to our experiences in the Canadian market, particularly the luxury market. So how's it going, relatively speaking, between Canada and the United States in that luxury segment?
So about 80%, so we'll do about $60 billion of sales, but 80% of that is US across the country, and about 20% is in Canada. Canada has been more stable. It didn't have quite the growth that the US had, but it didn't have the softening. So give you rough numbers. Over the last 30 years, the National Association of Realtor resale volume was around 5 million units a year. About 3.5 million units are people moving, getting relocated, get divorced, etc. That's just everyday volume. That number went up to 6.3 million units in 2021. It then went down to...
That's the peak of the
That's
COVID
the
market.
peak of the COVID market.
Yeah.
Then it went down to 5.1 million units, and it's now, for 23, 24, 25, it was around 4 million units, which is the lowest you've seen in 30 years. The number for January was 3.91 million units, down like 6%. Prices are soft. By the way, not all markets are created equal, right? Mm-hmm. So, the market in California is very different than the market in Dallas, Texas. The market in Saratoga Springs, New York is very different than Washington, D.C. or in Vermont. So we're in very...
As it is in Canada.
I was gonna say, there's
For
regionality
example,
everywhere.
Quebec is on fire. Quebec City in particular is on fire.
Hottest city in the country.
Yeah, whereas Toronto and the Vancouver markets are not.
So I would say a couple of things. It is very sensitive to mortgage rates in America. So right now you've got mortgage rates at around 6%. Okay, they go off of the 10-year. Now the 10-year has come down from about 4.25% down to about 4%. But mortgage rates, there's a psychological number. If mortgage rates start to have a 5 handle in front of it, you would see volume of transactions materially move up. It's our expectation that volume in the States will go back to 4.5 to 5 million units over the next couple of years, because there's a lot of pent-up demand. I mean, the advice that I give people, whether it's in Canada or in the States, is now's a great time to buy a house.
Agreed.
And if you say, well, will it be cheaper in a month or 3 months or 6 months or 12 months? Nobody knows that answer. But if you've got a 5 to 10 year horizon at a minimum, buy what you love, and because you're doing better today than you did at the peak,
Mm-hmm.
and it may go cheaper before it goes higher, but in general, now's a really good
That's
time.
a phenomenon of trying to find the bottom of a marketplace, and really nobody finds it. You've got to find near the bottom and take advantage of that and strike. And it's a hard thing to do.
But you know what's interesting? Compare purchases of stocks to purchases of real estate. People will make huge investments in securities with very limited information.
Correct.
Okay? And emotion. They buy stocks because they're going up, and they sell them because they're going down. But the practical reality is, if you know the inherent value, if things are going down, Buffett said that when it's raining gold, you should bring out a pail, not a thimble. Okay? But in houses,
Maybe we did do the next decanting with.
Plus, we've got to write all this down. I got to remember all this stuff.
everybody
It's being recorded.
Oh, perfect. Yeah.
Everybody does all this analysis, and they ask 42 people for their advice. Do you think this is a good price? And what do you think? And should I buy? But they're so analytical over small amounts of money in the large scheme of things. Because if things appreciate 7% a year, which is 5 to 7% appreciation in Toronto over the last 10, 20, 30, 50, 100 years has been proven.
Oh, yeah.
It's not
There's no-
straight.
Yeah, it
Okay,
oscillates.
It fails forward. And so the reality is, unless you need to refinance, you shouldn't look at what the price of your house is today or a year from now. You should just say, I love it, I can afford it, I've locked in my mortgage, I'm in good shape, now I'm
The
moving forward.
refinancing, Miles, is a bit of a problem right now because, and we've discussed this at length, a number of 5-year mortgages that were taken out during the peak of the pandemic are coming up for renewal. The one saving grace, what's our one saving grace?
Oh, the qualification test?
Stress test.
Yeah.
Yes.
The stress test. So what we're discovering is, even though we feared we'd see lots of power of sales and foreclosures, it's not happening to the degree that we anticipated because the stress test was so high that people qualified at levels that now on refinancing they're still capable of.
But didn't we hate that test?
We hated it.
And look how prescient it was.
Yeah.
And kudos to the federal government who initiated this thing, despite massive public outcry and resistance. It proved to be the right thing to do. It's a conservative thing to do.
During the great financial crisis, Canada and the Canadian banks were the only financial institutions that didn't need bailout anywhere in the world because of their fiscal conservatism.
Well, it harks back to a system that you and I were involved with for the vast majority of our careers, where it was very simple. Unless you had 25% down under the Federal Bank Act, you couldn't buy a house.
Yes.
The maximum loan to value was 75% of the
Correct.
appraised value. And that persisted for decades.
Correct.
Post-war. Very, very fiscally conservative position, but extremely effective.
That's why we when I grew up, we had no means. And so we were always renters. And it bothered me that we never owned a home. Why did we own a home? We never had the down payment.
Right.
So today, the average Canadian as a first-time home buyer is 40 years of age, unless you have the bank of mom and dad.
Let's talk about that for a second. 40 years old.
Yeah.
That's
Yes.
an incredible thing.
I
Chris
just actually read a NAR report where in the United States it's 42.
And you and I were talking about this last week. How old were you when you bought your first house, and how old was I when I bought my first
I was
house?
still at university.
I was 24 years old. The chasm, the delta between
You
I
had to get
do
that in, huh?
That was an opportunity.
Yes.
You had to get that in.
I did. Between 24 and 40 is huge.
Yeah.
So we started an initiative that I'm the principal backer of called Our Borough, which there are 2.7 million Canadians who want to buy their first home. They have on average $50,000. So let's assume it's $1 million purchase. You can get $800,000 in a mortgage. You need $200,000 down payment, and you don't want to wait till you're 40. So we will partner. So I put up $25 million of my money. We raised another $30 million from Scotiabank, the Labor Union of Canada, CMHC, and now we're working on the Ontario government investing $100 million.
That's
And
amazing.
We've already helped 275 families. So our partners put up about $80,000. So they own 40% of the home. We own 60%, and they can buy us out anytime. There's no requirement to. But we're helping people that would never have the opportunity to buy a home today, and who, in fact, have lost confidence in the Canadian dream of first-time home ownership. And now they have the opportunity to do so. And you can't believe how hard we had to work to get people to invest behind this. In fact,
Why was
OSFI,
that?
because
Why?
first of all, OSFI never even acknowledged co-ownership as an official asset class for banks to lend money as a mortgage.
Oh, I see.
Because there was not just
That makes sense.
Yeah.
and now they've approved that. And for the investor, they're getting 4-to-1 leverage for free because the homeowner gets to occupy the home. There's no requirement to pay us back for 30 years. They get all the benefits, and they don't have to come up with the entire down payment, of which if they had
But
to...
there's a repayment if there's a sale of the property.
Correct, yes. And our commitment as a family is we will reinvest 100% of any proceeds we receive to help Canadians buy their first home.
Great program.
It is.
The goal is to create $10 billion of equity value,
Great
helping
program.
10,000 Canadians buy their first home. And without it, they would be hard pressed.
You know, it's interesting because many years ago, CMHC used to do exactly the same thing. They used to provide you funds, register security by way of a second mortgage, oftentimes to help you buy down the interest rate.
Was there a name to that program? Do you remember?
That program came to an end.
What was it called?
Assisted home ownership.
That's
program.
it.
AHOP.
Right,
Yes.
I remember that.
The AHOP
You
program.
probably created it.
I didn't create it, but I was involved in it.
Right.
But it enabled people that would never have had that opportunity to be able to
That's
buy
correct.
a home today.
That's correct.
And for people that want to buy their first home, now's a great time. Because what are values down? 10, 20% from the peak?
Well, from the peak, they're about 12%, unless you're in the condo sector, and they're down almost 18%.
Right. Right. So you're creating incremental affordability today because of the lower price.
Yeah.
And,
I don't know that Doug and I have discussed this at previous podcasts, but I think we should mention that we are headed to a housing crunch, which you probably know better than anyone because you also are involved in the new construction side. And that crunch is going to come in about 3 or 4 years' time,
2029.
which means when we have that housing crunch, it's going to put a lot of pressure on values. And we're going to probably start seeing once again that kind of boom bust cycle when housing prices start rising again in ways that we're trying to avoid, but it's going to happen. I can see it. I would bet money on it.
Well, this is trending the same way as 1990 to 1996
Correct.
evolved. It didn't look like that for the last like 2 years ago. We weren't feeling that, but now it's become abundantly clear that we are following that same pattern.
Yeah.
so I follow Decanting Real Estate intimately. And on your last Decanting Real Estate, you said we're in a 7-year cycle. We're 3 years into it.
Yeah.
On that basis, by 2029, it should come out of it. So I will tell you, I speak to developers because, at Baker, we sell about 50% of all condos, which used to be a lot, and now it's down probably 85% from where it was. We do believe it will come back. Right now, we're doing bulk sales and reselling of existing units that are on the market that are unsold. So my expression was in 24, I said, we got to survive till 2025. Then I said in 25, we got to survive till 2026, but we'll have it in 27. And now I say, well, it should be great in 28, and we hope to hell there's something left in 29 and 30.
Should it be great in 28?
So-
That's a new one.
So the reality is, as you talk to people, you talk to developers, nobody knows. Nobody really knows the recovery, because I ask the same question of all the developers that I interact with. If a successful new launch is selling 70% of the units in 18 months, which you never would have thought was successful in the past,
That's
when do you
true.
think that happens? And now people are saying late 27, 28. But people are guessing because nobody really knows. But what you said is very true. If basic economic theory is prices move based upon supply and demand, if there's no new supply being created, and there is none, and there won't be new supply till 28 or 29, then any incremental demand of immigration, we've got 300,000 people, 400,000 people coming to Canada.
Well,
it'll
it'll only start again in 29, and then it's going to be a 5-year cycle past
Again.
that.
Yes.
Yes.
So we're in a real vacuum coming up. It's even worse when you think about it that way.
That's why investors are trying to buy bulk sales of
We're
condos.
We're seeing that as
We're
well.
seeing that. In fact,
At a-
we were involved in a transaction
Yeah.
in that regard.
at a very substantial discount, and rightfully so. You're taking a large package of units off of the balance sheet of a developer. Makes
What are you
some
seeing,
sense.
30, 40% from the peak?
I think it was 30,
30
in this case.
particular
Yes.
situation.
Yes.
But I think one positive thing as far as new construction, at least ground level, is Mattamy Homes recently came out with a program that basically
Excellent.
said, if you buy from us now, we will guarantee the price when you close. There might be a 2-year lag. Generally, the lag is less than in the case of high rise. But to be making a kind of a program of that nature, they must have
Smart.
the belief that we are basically at the bottom, and,
Absolutely.
and we're moving in this direction as opposed to moving in that direction. So,
So
all
you-
things are coming together.
Consumer
quite
confidence
nicely.
is
Yeah,
the core of that issue.
correct.
So I was going to say that last time you guys had a conversation, and it was about fundamentals and emotion and confidence. The biggest challenge right now is the uncertainties around free trade, tariffs, employment security, etc.
Correct.
Those are the
AI is also impacting
Yes.
Yeah.
on a sense of confidence and stability from an employment perspective.
But on a fundamental basis, you would be much more confident today making an investment in your home
Agreed.
than you would have 2 years ago,
Agreed.
3 years ago, right?
Agreed.
Just
Agreed. Our time is coming to an end. Do we have anything else to
Oh,
ask Miles?
well, we do, but maybe we'll do this in another podcast.
Perhaps we should.
Maybe we should.
But let's see how our wines are doing
Okay,
at this stage.
do it.
This one was coined for me the last time, Deb.
We'll give it. Well, have an open mind when you're trying it this time.
I'm getting bananas again, like I got the last time.
No, it's pineapple. You're
And
wrong.
pineapple. Yes.
Yeah, that is a recurring theme in these Decanting Real Estate podcasts. Pineapple has infiltrated our marketplace.
Can I talk about the privilege of being a partner for 20 years here?
Go ahead.
So the most extraordinary part of this is culture. There is a remarkable culture. And I've gotten to know it not only through senior management, but through the agents and as a client. That's true. What we bought in Muskoka, what we bought in Toronto, and creating a culture where you embrace talent and you make them feel part of a familial organization, where you go out of your way to add value to their experience and you treat them emotionally in a way where you're always there to support them. Whether you're a very successful high-end person or you're starting your career, and I have that experience through my daughter, it's the support that they get is invaluable. And that's why people want to be here forever. And I
we should
think
toast to that.
That you have just beautifully stated the essence of our culture at this company. Thank you for that.
but you guys really care.
We actually do.
On every single agent, whether they're this big or that big, every single transaction, and you seem to relish the opportunity when there's a challenge to come to the rescue and make them feel good, to solve their problem, and to also put your arm
Absolutely.
around their shoulder.
Absolutely.
There's no way we could have said it
No,
any
we
better
couldn't have
than
said it
that.
better. What a beautiful way to end our podcast.
Fantastic. Thank you for
Thank
that.
you.
Marco.
Pleasure.
Thank you for
By the
being
way,
on the podcast, Miles.
Thank you for giving me the opportunity. I've been soliciting the opportunity to participate
This
for a
is true,
year,
you have, yes.
and it's a pleasure.
Yes.
Thank you to everyone.
Thank you.
who's
See you on
been
the next podcast. Thanks for
and
watching
We look
and
forward
listening
to the
to us.
next one. Thank you,
Appreciate the
everyone.
opportunity.